What's going on, property investors? In this video, I'll be covering the highlights from yesterday's budget. Stay tuned. To kick things off, Rishi Sunak announced that we're in the worst recession we've had in about 300 years. The borrowing rate is at a record, as it hasn't been this bad since World War II. However, he thinks the future looks positive and will bounce back by mid-2022. Let's kick off with things on the job front. Furlough's been extended to October of this year, with some contribution coming from employers if they've got a certain turnover. The living wage has been increased to £8.91, which will come into force next year in April. Apprenticeship scheme's been kicked out with no age limit. I think it was £3,000 that they would contribute towards the wages. There have been new grants announced, and there is a new recovery loan scheme which will replace the CBIL loan and the bounce back loans that were introduced last year. And there's also a 100% discount on business rates until June. So the housing front, and this is what all you property investors are probably waiting for. We're going to start off with the stamp duty holiday being extended till June, which is great, to the 30th of June. And then it's not just going to be a complete cut-off. It's going to be a nil rate until £250,000 on the property, and that's until end of September. So it's not, if you end up completing a bit later, you're not going to feel the full brunt of the stamp duty that you didn't expect. Also announced is the 95% mortgages scheme, which has been talked about in the media for some time. I think this is coming in to help replace the Help to Buy scheme that a lot of developers were using to sell off their schemes, and this kind of opens it up for anyone. I'm not sure if it's just for first-time buyers. I need to double check that, but it benefits, you're able to purchase any property, not just a new build. Before we all get excited, this is not going to be open for all you investors. It's not going to help, if you're a buy-to-let investor, if you're looking to add to your portfolio, you won't be benefiting from this scheme. It's really just a little input from, Boris Johnson, really, to convert all the renters into buyers, I think the way to put it was turn generation rent to generation buy. And you'll be happy to know that a lot of the big lenders, Lloyds, NatWest, I think there was another list that have already signed up. So I think anyone looking to purchase their first property is going to be very helpful. Move on to tax. So the Tories had committed that there won't be any changes to income tax, etc. And it's true. No, there's no changes to income tax, there's no changes to VAT, and there's no changes to national insurance, which is great. However, they have frozen them for the next year, the tax brackets, and it will return again. It'll go back to normal from next year. However, for all you and most people that are now purchasing and have incorporated their property portfolios, this could come into a change because corporation tax is being increased to 25%. However, if your total profit is less than 50k, you will still pay the standard rate of 19%. And in between 50,000 and 250,000, it will be a tapered increase in the corporation tax. Only companies making over $250,000 in profit will feel the whole 25% brunt of the corporation tax increase. However, if if COVID has affected you, you're now able to pull back losses over the last 3 years, which will be helpful, up to £2 million, which can be helpful, for cash flow issues. There's also been a super deduction announced to promote investing, claiming back 130%, which is crazy. I've never heard of something like that in this country. However, before we get excited, I don't think this will affect, property investors. Investing in property is not going to get you 130%. It's more about, I think, it'll be around construction, machinery. So you invest into the business, so new jobs can be promoted. Also, on a side note, we know about Help to Buy. Now they're having Help to Grow for businesses to help directors, business owners get educated, and by educating, we're able to provide more jobs and help earn a lot more, which is also interesting. And I've signed up to see what it's about, but only time will tell on this. Finally, it wasn't mentioned, but capital gains tax. I know the media has been covering this for a while. I was a bit worried. I know that we all thought that capital gains tax was going to get increased. I mean, someone has to pay the debt we're in, right? But in this budget, it hasn't been announced, which is good news. I know a lot of people that were looking to, retire in this year were thinking about, cashing in before the increase happened. But look, I don't think it's going to be forever. I'd say if you've got property under an individual name, I'd say think about, incorporating it. It's weigh up the pros and cons. I'd say think about it. It's what I'd do. To summarize, there's no changes to capital gains tax. Stamp duty has been extended till June, and then a little step down to until end of September. 95% mortgages have been announced, and that will be for any house, not just new builds, which is great news. For new buyers, it opens up the floor to every sort of property. And also, there's no change in alcohol and fuel tax, so that's good news too. Look here, team, 355 billion to the sum of that amount we're in debt this year only, which means that it has to be paid back. It has to be paid back by taxes, and that's the only way I see. So if you go around and ask anyone, everyone will be pointing fingers at each other, being like, that person has to pay taxes, or hospitality point fingers at someone else, in real estate, or fingers will be pointing everywhere. But only time will tell. We will all get bitten. Someone's gonna get bitten. Only time will tell, and we'll wait to see that on the next budget.